Okay. Bias narrative, ladies and gents. Been meaning to do this one for a while, so it's a bit overdue. Apologies for that. What we're looking at is a blank NAS 100 chart. NAS 100 is a proxy instrument for the NASDAQ indices exchange. Because it's a proxy and it's NAS 100, we've got a limited amount of data going back in it to March 2018, but we don't need all that. We're going to give you a good overall look at the way that I do top-down analysis, which gives you your bias and your narrative. Bias is where you think we're headed. Narrative is how you're going to get there. Just to distinguish between those two. Slight difference, but an important difference. Your bias is overall, your narrative is the bits in between, basically. All right. So we're going to break down a completely blank chart from top to finish, starting on the monthly. Now, if you're trading NAS on a regular basis, you're already going to be aware that we're in this currently massive parabolic blow off top. Which if you're a support and resistance or a trend trader, then you're going to be equally well aware of if it's an instrument that you trade. So there's your initial sort of shape on the data that we've got here. Not quite enough. We've got this obviously expansion to the upside here, and then a pullback. So we pull back to that level there, taking out all this liquidity. Same thing up here. We've got the second angle of attack. Ignoring this one. No, well, let's not ignore it. Let's do that. We'll do that one for the second angle of attack on the overall parabolic blow off top. Remembering that NAS, like all indices, is generally a bullish instrument anyway. And then we've got our third angle attack going up from there to there on the monthly. Okay, so the monthly is going to be obviously a bit different from the weekly and everything else. And then we got our absolute blow off top then, which up until recently was pretty vertical going up that way. Okay, we can adjust that slightly, but as you can see, we're still in the blow off top, right? Ignoring that bit there, because that's one sort of issue by itself. I think that was the tariff tantrum. That was the last pullback that we had after the expansion. That trend line would have been up that way. So anyway, overall, as you can see, we're in this blow off top. All right. So getting rid of all that, because this is not support and resistance, is a bit more refined. If we're looking at this on a monthly, the way I would start marking it back up is here. This is a cycle low, this is a cycle low, and this is a cycle low. Right, so the first thing on a monthly, we wouldn't need to mark all this up necessarily, but we may as well run through it because we've got a one big fair value gap there, which would be a monthly because you can include those two together. And you can see very clearly that on that we've not even got back to the 50%, which is the consequent encroachment. We've just pushed up again. So we did have a pullback, and now we're on our way back up to what we suspect is going to be a last angle blow off top to go up to, I don't know, there-ish, something like that. Okay, so looking at this, and I'm breaking it down monthly. We'll just actually change that so you can keep track of it as we're going on. Obviously, as we break it down, this is going to end up over here somewhere. So I'm going to pull this in to make it sort of a bit more manageable. Don't know if I've got a monthly one set up. If I will go for weekly fair value gap, I will change it to monthly. So we'll go for, it's the way I would mark that up. Okay. Dropping down to the week time frame. This is your higher time frame analysis. You can see exactly the same thing supported there, but now we've got very subtle differences starting to creep in. Okay. Now, one of the most, in my opinion, important imbalances you can get is a volume imbalance. So volume imbalance is basically where you've got just candles, just wicks, I beg your pardon, between two candles. So this would be a weekly volume imbalance there. Bear in mind, week is obviously 7 days, so it's, you know, quite a chunk. So I'm going to change that, mark that to a weekly VI, right? So there's a weekly VI there. What you're going to do is just expand that out so we can get it more accurate. Because if you don't, then it's not going to give you the correct information that you need when you're actually on the smaller time frames. So we need to get this as spot on as possible. That's a nice good stretch out there. Now you can see between 496 and 499, and if you point, you could even stretch it out more than that, right? You can stretch this out. As you can see, the more you stretch it out, the more precision you can get. And this is important, especially when you've got big areas. So we'll just do the bottom of that again. May as well go through this properly, but it is overdue. You guys need to know this. I think of all the things I learned when I was coming up in trading, I think bias and narrative was the one bit that started really pulling everything together for me. Because the 3 questions, and this is, you know, write this down. The 3 questions you should always be asking yourself before getting into any trade whatsoever is, where is price delivering from? Where is it trying to go? And how is it going to get there? Now, the how is it going to get there bit is the narrative part of bias and narrative, and then your overall bias, obviously, as we've discussed. I'm going to put another one in there, still on the weekly. So put that to weekly VI as well. These are all saved as templates, easy enough to do. Saves you some time when you're marking up your charts. I'm in the middle of doing a coding an indicator, which will do a lot of this work for us. But it's quite a biggish job. So until we get there, it's important that even if you're going to use the indicator, it's important that you understand how it's being mapped out anyway. So you can always go back and double check, you know. Or if you want to, you can add bits in manually, do it by hand. That's what I've done for years and years and years. Never let me down. So again, we're stretching this. Let's see how wide we're stretching out over here. But again, you're in talking fractions, but they're important fractions. Okay, so save that there. So we've got some markings up already on the chart, okay? So what we've got is a big, huge monthly fair value gap below. Now, I'm not going to put everything on here because we don't need, because we're in an uptrend, right? But there's a volume imbalance there, right? I'd mark that in on weekly, and then we know that because we're in this big monthly, we're going to have the fair value gaps as well. I mean, that is weekly fair value gap there, okay, which you could mark up at some point. You know, if we're coming back to, that's a volume imbalance there, which you'd need to have marked up. Then you've got a larger fair value gap there, etc., etc. But at the moment, because we're going up, we know this is there. We don't really need to worry about these for this point in time. You know, in the interest of simplicity, keep it as simple as we can, really. So the next key things that we need to do here, right? So we've got weekly, so we've got a weekly fair value gap here, okay, which is this is quite near to current price action, so it's very worthwhile having that put in. Again, same thing applies, right? If you've got an indicator doing it, it'll be a lot more precise, and we can do it by eye anyway. As you see that, look at that difference there now. This is me being very anal, by the way, but you know, nothing wrong with that when it comes to precision, in my humble opinion. Okay. So, bum, 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 bum. I've had the question the other day in the group chat as well, if this was, the same thing as support and resistance. It sort of is and it sort of isn't. Support and resistance will give you general areas and general sort of things to follow. They do work, support and resistance is as valid as anything else. If that's what you want to use, please be my guest. If you want precision, in my opinion, I've used everything at this point in my trading career. I literally have used everything, right? So this is what has stuck for me, and this is what has done me the most good. Because I like, because of my ADHD, I do like to be as accurate as humanly possible. And this kind of system where you're mapping out order flow and being very specific about entries and exits works brilliantly for me. If it's different for you, it's different for you. We're all different, don't forget that. Okay, so this is the current week that we're in. What are we on here? We're on Friday. So this is coming up the end of this week. So unless we have a disaster, and today absolutely tanks and smashes down, which is always a possibility, you've got to remember that when you trade in the financial markets, all things are possible. Okay. The other thing I would mark up here straight away is, the thing that jumps out here, right, is this is the all-time high, obviously, right? Or maybe not obviously, but it is. So that is an important area. We've already, I'm running a couple of longs at the moment on other indices. I did have a long one on NAS, but I bottled it. I had too much exposure. But long story short, this is the ultimate external range liquidity. Okay, so that would be your all-time high. That you'd have to put in there. TH, that was a Wednesday, I believe, was it? Let's have a look. No, it was a Monday 1st of June. Okay, is that right? Let's put all-time high in and just check that monthly. Yeah, it is. Oh, it's giving me the it's not giving me the exact date because I wasn't on days, silly boy. So that was a Wednesday. Look, Wednesday the 3rd. That one was. So switch back to weekly a minute. Thought it was Wednesday. So Wednesday 3rd of June, all-time high. Wednesday 3rd June. Okay. So ultimately, we're just even going to back up there and smash past it, basically, at the moment, and it's looking good. Does it have to go up there? No. Can it roll over? Absolutely. What's most probable? Where is price delivering from? Where's it trying to go? How is it trying to get there? Okay. So let's assume for a moment we have a couple of scenarios, right? This is the weekly low. We're not going to put up weekly highs and lows on here at the moment for various reasons. But what you've got here is the all-time high on the 3rd, right? Then we had a lower low here, and then we had a higher low. Now, if price were going to be perfect, that low would have been here. So it'd been high, lower low, lower low, lower low, lower low. Okay, equal lows there, which we smashed through. But price isn't perfect, so there's a slight disparity. You see a little fraction between those two, but this is all liquidity, right? That will have not taken all the liquidity from there. That will not have taken all the liquidity from there. So every time we go up, these are all liquidity targets, and that's what drives price, despite what everybody wants to tell you. It's liquidity, right? It's not support, it's not resistance. Order flow will move from liquidity to liquidity, and that's what it does. That's how orders, in order for an order to be completed, if you're selling or buying, you have to have an order the opposite to it. For every buyer, there has to be a seller. For every seller, there has to be a buyer. For that to actually physically happen, right, on exchanges, you have to have liquidity. There's no way around it. Okay, so this is what I was saying about the lower high and then the slightly higher high, which should have been a lower high to be lower high to be perfect. And then on the daily, every one of these is a liquidity target as well. Now, as you can see, we've just taken liquidity from back here, and we've had a daily candle close above it yesterday. We had a massive candle yesterday. I think that's marked up on my other chart, but we don't need to mark up on here now. What we do need to mark up next, right, on the daily, is the daily VI is below the weekly VI. So I'm going to skip that for a moment because we know the weekly VI is there anyway. Actually, I'm not going to skip it just in case we do crash back down, which is not my base case. It's not what I'm expecting, but doesn't mean to say it's impossible either. So, you know, that again is the way to approach all markets. You need to have a scenario in your mind for what happens if it goes up and what happens if it goes down. You need to always be aware that either is a possibility. So that should be a daily VI. Is it a daily? Yeah, it's a daily VI there, Bosh. Okay, wow. Right, so I will put that in because we've got to be aware that even though I'm not expecting that, that can happen. Okay, then we've got the next important thing then is this, which is a daily fair value gap. Should have one of those. Daily FVG, Bosh. I'm going to put that top as well. Bosh there. Now we're getting somewhere, right? We're getting a picture. So, the next thing I want to mark up is we've taken yesterday's high already, which was my first trade in London this morning, which was called in the chat. For those that want to take it, I think I was the only one that did that, goes, but that's the way it goes. So we've taken that high, and what we're getting, what we're seeing now, again, common, take a high, and then we're obviously going to get a reaction off it. So that means that that was a valid draw on liquidity, purely because we've hit it, and now we're pushing the other way. So this, now that it's taken that, I'm going to see what happens in New York, because it'll be live in New York as usual. Could push all the way back down here, could push here. What we don't want to see is in New York. Ideally, if we're going to go to New York, because we're on the daily here, we do want to go down and then go back up again, right? So, you know, we need the, as I say, you need the liquidity to drive the momentum that you want to see. It is Friday, so it's equally possible you could get, thank God it's Friday, TGFI Friday, and tank all the way down to here before going back up there. And it is also possible as like a last case scenario that we don't go back up there. But my base case is that we're going to make a new all-time high. So I'm going to construct a lot of my ideas around that for the moment. So maybe a good place to show you. Next two things I want to put in here while we're on the daily, okay, is across here and across here. Reason being, we've got stacked daily highs there, session highs, which are very strong draws in liquidity. And our actual dealing range in a moment, because we've just broken through that. This would also be our low from yesterday. So we'll put that in as well. And we'll go there. And we'll go here, right? So let's have a look. Bosh. If you want to make a trend line straight when you're drawing it, right, we go over there. Just keep your finger on the shift button, go there, and when you go shift, it'll straighten it out, right? So once you've got your line in place, shift, and I'll keep it. So that's yesterday's low. Yesterday was the 26th. This is the next liquidity up here. Again, I'm going to stretch it out a bit to get it precise. It's no good measure if it's not. So that one is from the 26th. 26th. So it should be the 25th then, is it? That's the 26th. What's the 26th? How's that working? June the 30th. Tuesday, June the 30th, 26th. Or 30th to the 1st, look. 30th. What was I saying? Okay. Anyway, so that's the 1st. We're going to change that to when's the 30th, right? So let's do that one. This one was not again. That one was the 1st. Okay. That's all I need off there for the moment, right? Again, if we push up here, then these start to become relevant, but you know, we want to keep the chart reasonably. Again, if we're adjusting these, just pick it up, put it there, and put your finger on the shift button just to straighten it up, right? Make your life a lot easier. Okay, so we're getting a good overall picture of what's going on now, which is my bias at the moment is bullish. That's based on cycle theory as well as what the price action, the technical analysis is actually showing us. But we don't need to worry about that for a moment. So we've got the 4 hour. Now let's switch on the ICT indicator for a minute and go down to the 1 hour. Yeah, 1 hour. What we're going to do here is pull these back in, right? So they don't look too messy. I'm just using this at the moment now. Line these up just for today, right? I'm going to leave the all-time. Oh, no, I'm going to put it again. Because what we don't want is he's shooting off the right-hand side. You'll not be able to see when you look in the smaller time frame exactly what they are. That's below there, look. Typo. Okay. And then we got the June 30th session, right, on the first session. So we've got lots of targets there, up and down now. So we got a scenario for being bullish, and we got a scenario for being bearish, right? And what we're looking at, huge gap there. There's a bit of massive drive up. So that's good. So next level down is the 4 hour top down analysis. Now certain time frames, guys, are correlated, which means they're linked to each other's, but I'm not going to get into that. It's beyond the scope of this particular video. Now we've got daily fair value gap there, and inside of that, as well as that daily fair value gap, we have a 4 hour fair value gap as well. Now unless we start dropping down, that's not going to really be relevant at the moment. So do I want to put that on? Tell you what, I will put it on just to show you what I would do if I wanted to, right? So that fair value gap will go from there, that low, to there. And then what we've got is we've got a daily fair value gap inside a 4 hour fair value gap, or vice versa, whichever you're gonna look at it. And I'll show you what that looks like on the lower time frame in a moment. So 4 hour, we've just taken relatively equal highs there, okay, and we're pushing back up. So it looks like, again, we're remaining bullish, and these become, you know, a key sort of like point of interest. If you look to the left here, there's no real gaps. There's a little one there on the 4 hour. There's a little one there on the 4 hour. If you scale that in, look. So those are what I refer to as premium discount arrays, right? We need to, this is where we're at in price at the moment. No gaps there to slow us down. On the 4 hour, on the 1 hour and 15, it's going to be different. Small one there, we need to negotiate before we can, oh, look at that, relatively good highs as well on the 4 hour. Tasty. So that's looking even more sort of like likely there now. Okay, so dropping down to the 1 hour, which starts to pick up the indicator. This was the trade from this morning up to there, which is already closed and taken, done and dusted. And it does seem like we've got an awful long way to get up here. Easily doable. Look at what happened yesterday. Right? I'm very bullish at the moment. So the next thing, right, the only thing I would worry about here now from a top-down analysis viewpoint is session highs and lows. Now, because this is a blank chart, it's not marked on here, but this was my target for the London trade this morning, which was marked on the proper chart, on the other chart, I should say. And that was, the way I would mark that would be simply as yesterday, New York pretty sure it was a PM high, but you can't see the PM there now. I'll leave it at that for a moment, right? And the other key focus point on here, right, would be the London low, which is there. Okay, that is the, we'll do it on the 1 minute actually. We'll keep that in there. Now we're going to drop down to the 15-minute. Okay, so this will help you differentiate a little bit more. Pushing back up again. Going to be nice. Ideally, what we're going to say, just off the top of my head here, ideally what we want to see here in New York is a drop down, first presented fair value up, clear up, and more of what we had yesterday. But we'll see if it plays out that way. Yesterday we didn't get much of a drop down, and we just shot off, which caught a lot of people unawares, myself included, I won't lie. And there was a lot to be learned. This was a massive opportunity for trade yesterday, and there were others which I did break down on a training call with one of the lads. Valuable information in yesterday's price action. Could have been a much bigger day than it was in the group, but can't be perfect all the time, ladies and gents. Okay, so yesterday's New York high, we got a lot of gap to get through here, and that's the next target up there. Can't see us getting back down here, but if we were to look at anything today, it would be if we do have this drop down, and we may not even, I suspect if we do drop down, we won't get anywhere near this, but that would be the London low. And we're only interested in the most recent, right? And that would be double Asia low. Relatively equal lows. So we put that in as very equal lows, Asia lows. Because again, right, strong draw liquidity. So we've got a strong draw, strong draw, strong draw, strong draw. So one or two things, or a couple of different possibilities, and this is how you get your bias and your narrative. So bias is we're going up, hopefully. Our narrative, how do we get there? So you need a bearish and a bullish bias. We're looking for New York Open now. We've taken the London trade. So New York Open, do we go down? How deep do we go? Because all of this is liquidity. And if this liquidity is taken, that is fuel to push back up higher, right? Does it have to happen that way? Absolutely not. You've got to remember that everything is on the table all the time. But let's say we swept halfway to London low, all the way down to there, doesn't matter where we go, right? This would be very surprising for me personally, but still possible. So let's say we sweep these lows here, right? But we stop at that order block there, right? So we're going to go from here. Well, actually, let me undo that because I messed it up. Too busy pointing then. So down, sweep some lows, and then first presented fair value gap, back up. Remember, you don't go in a straight line necessarily. You're going to get friction, places and way up, and then all the way up to whatever our draw on liquidity is. So that would be up here, right? Or even up here. So that is one possibility. That's your manipulation to expand higher, right? That's one narrative that you have to have in the back of your mind. The other narrative, which is a little bit harder to work with, which is why it's not the preferred option, is we just drop a little bit and then, like we did yesterday, and then just fly up, right, with very little sort of structure in it. That's difficult to catch, still doable, and we have to be aware of it because of yesterday. And then the other scenario, which is we manipulate up, thinking, oh, we're going to go there, and then Nas has a nasty habit of not getting to its primary target, and then tanking back down just to smash everybody that's in buys here to some point down here, and then, you know, eventually going back up to where it wants to go to properly by the end of the day. So there's all sorts of different scenarios, but that is what's that gone now? Why is that gone now there? Delete. So that's where we are. So bias is up, narrative is bullish, would be down and up or just up, and bearish would be, do we go up and then tank, or do we just tank? So all four of those are on the table, and we need to see which way it plays out. Okay, that's it for this recording. Hope that gives you an idea, or a stronger idea, with top-down analysis and bias and narrative. Please don't forget the 3 questions. Where is price delivering from? At the moment, it's delivering from Asia low all the way to London. Where is it going to go? Is it going to go here, or is it going to go here? And how is it going to get there? Those are always the 3 questions, and that will dictate, together with experience and time and effort, your sort of fundamentals for day trading, scalping. This works on swing trading as well, by the way, guys, right? Just slightly different approach. And that's it for now. Any questions, feel free to hit me up. All right, guys? Have a good one.